space. I don't care who you are. If you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up.
Hello and welcome. This is the Daily Crypto. We have with us Kevin O'Leary, otherwise known as Mr. Wonderful, to talk about macro factors and the situation of Bitcoin. You don't want to miss out on this video because Kevin is going to make some very important points that could help you protect your portfolio from any more losses.
Particularly if this Build Back Better bill prints another $400 to $600 billion and flushes it right into the economy. That's probably not going to be a good outcome for inflation because it's very inflationary, even though it's trying to be labeled as an anti-inflation bill. Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor. The other that's really interesting that has a lot of market watchers really scratching their heads right now because it's never happened before. You've got a situation of full employment that's like 3.4%. And yet at the same time, a second quarter of GDP shrinking. That has never happened before. So one way to interpret that is to say the productivity of the 2+ million new workers that have just been booked into the economy must be very, very low. Or maybe they're not really working 8 hours. Maybe they're working less, but there's something not working to the traditional model, which is why I think it's giving Powell pause, because he has been job owning a more dovish Fed, having just done the 75 basis points. Even he doesn't know what's happening here, so he's data dependent. We've never seen this before. Never in the history of the economy in 200+ years has this ever occurred. So again, another sign that is not fitting with what everybody wants towards this recession, maybe.
With the 2 consecutive negative GDP growth quarters, statistically speaking, we are in a recession. But the government is not acknowledging it and countering by saying that job numbers have increased. Now that is a whole other debate, but Kevin believes we haven't seen peak inflation yet, and it will increase in the near future.
I see Bitcoin sort of testing 20,000 all the time, getting a lot of resistance there, seems to be holding the 2023 area. Still very profitable for Bitcoin miners that are currently mining at about 7,000 per coin at scale. And so there has been a knee-jerk reaction against Bitcoin miners lately because of ESG concerns, but they're also self-correcting by getting into nuclear and hydropower, which is plentiful in some countries like Norway. Now, crypto itself desperately needs policy. It needs regulation. And there was a bill just 2 weeks ago that was contemplated being pushed through, not on Bitcoin, just stablecoins as payment systems. And as you know, that's been a very volatile area. That bill, that initiative has been stalled till September, but I think there's a 50-50 chance that we will have policy on basically stable coins tied to the US dollar. And let me explain specifically why I think it's going to happen. There is a turf war going on between the SEC and every other regulator as regards to crypto, NFTs, tokens, all of this stuff. And so the smart regulators, the policymakers are saying, well, wait a second, let's pick one outcome. Let's just do payment systems, just like a credit card, a Visa card, or a money market fund, which has very limited flexibility in terms of what you can hold in it, basically T-bills and dollar for dollar cash. Same thing with a payment system like a stablecoin. If that policy comes down, let's say it gets done in September, that's a signal to the market that we're starting to break open the logjam on policymaking. And I'm very, very optimistic.
The SEC is trying to regulate stablecoins as a form of payment, which is a huge milestone for the crypto industry, as it will allow more people to become familiar with crypto. This will also ensure the safety of stablecoins to prevent disasters like Terra Luna.
The big players, the big market cap names like Bitcoin, like Ethereum, like Solana, like Polygon, HBAR, in some cases we doubled down. We took advantage of the extreme volatility in the large cap names like ETH and like Bitcoin. Why not add to the position if you're going to stay long? But, everybody trying to manage this space, I don't care who you are. If you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up. If you'd own these positions for more than 2 years, you're basically in a break-even situation. So this asset class is not correlated with anything, as people thought. It's not correlated with inflation yet, but the real problem, and every time you and I talk about this, it's really a gauge on where the institutional buyer is. And right now, zero. They have no Bitcoin. Anybody that tells you the institutions, the sovereigns own it, is full of poo-poo.
Kevin's portfolio has a fair amount of exposure to cryptocurrencies, and he revealed that he has taken a hit too, just like everyone else. He says that bigger institutions are not buying crypto at the moment because they're not sure about the direction of the market.
Camp that says dollars, King dollar is going to be stronger, euro is going to probably, worst case, go to 80 cents. I mean, look, they've got lots of external issues there that we don't deal with here. They have the Putin factor, the energy factor, how screwed up Germany is in shutting down all its alternative power. They did that to themselves. That's a self-inflicted wound. The Ukraine, the grain situation, the market knows all these factors, but it doesn't give you confidence to stock up on euros. And, you know, for me, the way I'm playing it is I'm buying the top 50 European names in their local currencies, in Swiss francs, in euros, and British pounds. Because if you look at a Nestle, or you look at American Tobacco or a Roche, half their sales, in some cases more than half, are in the United States. And now you get to buy them in their local currency at massive discounts, PE discounts, and currency discounts. So why not take down a little bit of Europe? And I've increased that position for me specifically to 20% of the operating company's portfolio. European names, mega caps, big cash flowers, selling at huge discounts. Everybody hates the European zip code right now.
Mr. Wonderful is expecting the euro to go down to 80 cents on the dollar because of several macroeconomic factors, like Germany shutting down some of its nuclear power plants and the Russia-Ukraine war. He says he's buying shares of the top 50 biggest names in Europe, like Nestle, because once the euro starts to recover, these stocks will boom. Do you think the euro is going to make a recovery anytime soon? Let us know your thoughts in the comments below. Support us by liking this video and subscribing to our channel. We make informational videos like this daily, so make sure to press the bell icon to never miss another upload. See you guys in the next one.